Well, hello everybody. It is June 21st. This is the weekly review where we take a look at what happened last week, what the fundamental and technical setups were and are, and how it looks going forward, both on a near-term basis and a longer-term basis. So that's the ideal. That's what we're trying to do, and see where it takes us. If we look back at what happened, you actually had strength in the areas that you'd like to see it, and that is that you had the NASDAQ and the NDX, and of course the Russell, right, showing the strength. I mean, that's where the strength was. You can see the gains there, and here laggards being the listed issues. But all in all, it's still gains on the year, and they continue to push this up, so we have to respect that. So if we turn our attention to the charts and the technicals, and fundamentals, kind of a quick review. The breakouts on the NASDAQ and the Russell 2000 were probably the most important situation last week. You can see it here on the NASDAQ. So, the breakout was here. It was confirmed on this, but suspect on that. Gets over it and actually fell back on volume inside day, but fell back on volume on Friday on that quad witching, and trades back into the swing point high. So now we're already doing an immediate retest regen, right, which has kind of been the whole story all year long, in that one after another, anytime you get breakouts, you typically fall right back in to test them. And that's exactly what we're doing. You're pushing back in this case on this time frame with volume. I guess I don't take that as that negative. The real test is the retest regen, and the real test will be volume as you get there. If we move over to the weekly, though, there you actually have something that's kind of negative, and that is that you went over this high, right? So you tested the high, you get over it, you get back underneath it, right? You fell in terms of volume and in terms of price. That's the big negative to me. That's on a weekly basis. So in other words, we could see this market push again to the upside intra-week, but it does look like that's a failure on the weekly basis, and unless it gets over it and stays over it this week, more than likely that suggests this thing's going to come back again. And I've talked ad nauseum about these ranges that have been in effect all year long, and actually since last year, and those ranges continue to be in effect, and they haven't changed, right? They're still the same. If we drew this one in correctly, it would be back down to here. They're about, you had the broad range back here primarily because of October, right? Matter of fact, if you take the October out of it, right, you're really talking about ranges that look kind of the same, just elongated ranges that have taken place over time. And those ranges, right, we're getting to the point where this one more than likely is going to break one way or the other. Either it is going to extend to the upside, or we're going to see it come back down and test the lower end of the range. So one of the two more than likely is going to set up on this time frame in the next few weeks. So I don't know which way it'll break. What I do know is that your trend is always your friend. The trend definitely is to the upside still. So, when I look at it from those perspectives, all those things tell me that I have to assume that this thing is going to try to work higher until I get some evidence that it's not. We still have all these swing point lows that are gathered in congruent areas, right? These would be the first that would have to break, and this is the strongest index. It's given no indication of trying to break. But you'd have to see this thing trade back down here and below these. And if you look at that, we're talking about 250, 300 points. I mean, we're not talking about, it's 200 points. We're not talking about small numbers. I mean, you'd have to get a fairly decent sell-off, 5%, just to get back to swing point lows on this time frame. So, this market remains very strong, and that really hasn't changed. On the Russell, we actually got the breakout here as well. So the breakout here, not only was it on that time frame, it was on the weekly, and it held on the weekly, even though it's suspect, it was just almost as much volume. So once again, the Russell continues to lead us higher. If you remember back a year and a half, 2 years ago, the Russell was the best read on the the time frames that we had then, they were telling us down and push down, and we actually got the push down. Here's kind of the ranges. If you project this range forward at about equidistant of this, you can see there's not all that much to go to the upside. More upside, but not huge. If I stretch it just a little bit farther to reflect that size, right, it's about like that. So yeah, we could get another, good, maybe, 20, 25 points to the upside here potentially. So, we can move up into that area. So, when I look at the Russell probably is still the most positive of the indexes out here. And the fact that it's broken over here, continues higher, volume expands. It was inside bar. Everything on Friday pretty much was inside bars. But it is a positive development, continued positive development. I like the way it looks. And, if I had to say what is most positive, that probably is it. Looking back at other things here, NASDAQ finally got over the 2,000 highs. I don't place a lot of weight on that, but I'm sure you'll see a lot of articles about, especially if we start to pull back, that is kind of a huge double top or something. But, I mean, come on, double tops over, 15 years? Yeah, I don't think so. A few months you can think about double tops, or, a few years at most, but 15 years, it's just a mental thing. It's a mental thing at this point. I just talked about the weekly, getting over it back underneath it, lighter volume. The index is yet to test, and I think it's important, if we think about these other indexes, NDX, the S&P 500, and so forth, there's divergence. And what I mean by that is over here, you have the situation where your highs are up here and you haven't gotten to them yet. That's true on the index, it's true here, it's true on the Dow. That's divergence. One side or the other is wrong. In other words, either these are incorrectly too weak and will join the NASDAQ and join the Russell higher, or vice versa. The others will get pulled back in. Now, all this year, it's been about pulling back in. And I don't know that that's going to change. So we could get a push up. These could come up to the tops like we talked about, and then everything come back in again. I do not see, the catalyst to take us extremely higher unless Europe just takes off again. But I suspect Europe is range bound still and will be for some months. And that's probably true of Asia as well, and we'll get to those here in a second. So the divergence, my guess, if I had to, do the, kind of the betting man thing, what would I do? I would expect these to come back up to these highs, maybe potentially just get over them, right? And then everything get pulled back in again. Worst case, we've already seen the high on this move, and we're going to pull back in and test the lower end of this. There's ranges everywhere. We've talked about these ranges over and over. I mean, if you look at it on the daily chart, you kind of have, excuse me there, but you kind of have this range there. And, it tested into the lower end of the range, held. Now it's gotten back over it. It's going to try to test the top of the range more than likely. That's typically the way these things work. Okay, so going back to the notes here, Fed. Okay, so the Fed, everything the Fed is doing, has been doing, is just all good. They fed this market lower interest rates for years and years. They're still low. They still continue their bond buying and everything, and replenishing, keeping the money in the system. Everything they do is good, and right now, the way they are positioning everything, it's seen as all good as well. The bad is going to happen when we actually get a downturn. When this economy really does pull back. And that's going to be hard to do in any sustainable way as long as you have QE going on around the world, right? Because that pushes or pulls future expenditures into current time frames. And so, world markets are going to continue to hold us up, even though the Fed's not doing the QE itself, or at least not doing additional QE. The European market's still range bound, and they're struggling in front of the European decision. If I pop over there and show you those charts, I don't see huge negativity here, and the reason I say that is because even though they continue to expand the range to the downside, it is a struggle to keep it down there, and you can see that in each of these bars on the daily here. You can see that as you get down, it pushes back up, right? As it gets down, it pushes back up, even though it only held a bar. Gets down, pushes right back up. So the buyers, keep nibbling as this thing comes in, and the sellers disappear. And you see it here on the long tails these last 2 weeks. That's here on the CACs. It's also here on the DAX. You got these long tails. Buyers keep inching in, and the sellers walk away as you get the lower and lower prices. So the range expansions there, range expansions now in Asia as well. Let's look at Shanghai to start with, because Shanghai finally took it on the chin and took it in a big way. So you go from 14% correction almost down into these lows. This is a retest regen off this prior high. It's the second time now, so it has lower probabilities. So in other words, we could trade down to the next levels. I mean, that is possible. We've got the big bar here, so this would be the bar to look at on the way down. So if I had to pick points, of where this thing should turn, the first one is right here where it is. The next one is into this bar, and then of course down here as well. So these are all price points, and the faster it comes down without a bounce, right, the higher the probability of buying these become. In other words, because you're going to get some sort of a bounce more than likely off of this strong of a market. The fear could set in and drive this thing lower, but at some point you're going to get a bounce. And then that bounce, if it fails, says we're in that range. We just have to see where the first part of that range develops from. And if you pull this back and look at it on a longer term time frame, you can see the huge run. So to get a range, excuse me, let me do that again. To get a range that is from this level where we are now, right? 14% range is pretty big. That could extend, right? It could extend. If we just project it down, you could see how it could extend back into this big congestion area. If you think about Europe, and you think about how Europe congested, and now they're fading almost back into this on their time frames, you could see how this is just beginning its fade, right? And eventually we'll set up these ranges probably the same sort of way. How do you trade that? Well, you just find spots, you buy a little, you sell it. You buy a little and you let the range trade out or expand out for a few months. And then eventually the idea is like the ideal always, and that is that whatever that trend is going to continue. So you get a range expansion, right? Somewhere up in here to start with, and then maybe down to here. And you just expect that eventually it's going to do the same thing. It's going to take back off again. Because whatever led it up here is probably not going to go away that soon. That's usually the way this stuff works. So that's Asia. So the point of bringing this up though is Asia is not going to pull us higher, because Shanghai is doing that. Nikkei is also doing a range trade, and if we look at Hong Kong, it's doing a range trade as well. So when we look at all of those, right, they're bleeding range all over us. That's fine. It's just a different trade. It's the same kind of trade that we've been trying to do in Europe. Europe's earlier, longer in the cycle already. And let me pull back up. I'll just go to the DAX and I'll bring it to the weekly, right? I was just talking about how that Asian trade would come back into the congestion area. Well, that's what this one's doing. It's slowly fading back. These are the two bars on the way back that are going to be important. And it's like right at those bars now, right? The beginning of those bars. So we could see a fade into them and then the bounce. But we can see that we're slowly getting to the point where this is going to try to bounce. And I say this having no idea how the Greek problem is going to resolve, right? It may take us into this and then we bounce out of it. It may just simply go higher from here. I can see that it's slowly getting to the point where it wants to bounce, and we have to expect that it probably will continue the trend at some point. And we have to be patient enough, build our positions, and expect that at some point we'll get that continuation just like we saw before. Okay? All right, let's go back here. So the technical positive, I already talked about that. Breakouts. Long-term trends are bullish. Bonds I didn't talk about yet. Let's quickly look at those. Those actually are trying to get a consolidation move going, which again is good for equities in that you don't want bonds or currency selling off hugely. And we can see here, we've had, it's not a pretty picture. You've had the move down, a continuation move down, and you've had a little bounce here and now a little bounce going on here. As a matter of fact, if you wanted to draw this in, you kind of have a little ABCD structure that's formed here that could take us up back into this area. So, all in all, it's doing what it should be doing. And if I look at it on the daily, the test this week is going to be the retest, the bearish retest regen. So it tried to regenerate lower. Sellers couldn't take it lower. Now they're bouncing it back up. This is the second one. I think it has a decent chance to come back up and test up into these highs one more time. So, this is positive in that it's no longer just free falling to the downside. On this time frame, weekly, you actually had ABCD structures, and I believe they just about finished. If I do the big one, right, that was from there to there, so it just about finished, I suspect. Now you're getting the bounce. You have to expect that you're going to get some sort of a range probably as you come back into this big bar from October last year, and I suspect that is going to be where this thing trades for a while. Elsewhere, gold, silver, really nothing interesting there. And let's go back to here. NASDAQ, all of the negatives. Failing to hold that weekly high is not good, and that divergence I talked about as well. Fundamentally, the Greek question is likely to be answered this week. It may not be definitive, but we're probably going to get a good feel for whether there's going to be some sort of a default or not. Again, the data has been better. That's helped us domestically, and the Fed continues to gently set the stage for that rate hikes, right? And it was curious because the words Yellen chose right at the end of her conference was it would be a sign of confidence that we would see an increase in rates. And so she's setting the stage to say, hey, we're going to raise the rates. We're going to do it very gradually, and it's going to tell you things are better, not worse. And so, you should go higher, right? That's kind of what she's telling us. Negatives, Europe, and the valuations now in China finally being called into question. What would I be watching for? I'd be watching for the range expansions in Europe. Do they expand, or do those long tails that we saw, do the sellers just walk away as they have the last couple of weeks, and you finally get that pent-up demand take over again? You're going to get an explosion if Europe sees the Greek question being resolved. You saw it this week. You saw big, I didn't point it out, but you saw big spikes up. I think it was on Thursday, if I remember right. Let me pull the chart up real quick. Where there seemed to be a resolution, and there was this huge spike that took place. It was this bar. It was Thursday, right? Out of nowhere, just spiked up. Intraday was a big spike, and that's all on Greek. And so you can see that, the concern is there. The shares have been beat down on that concern, and if that concern is removed, this market's going to move fast and it's going to move higher. Economically, not a lot. You've got the Greek situation in Brussels, another meeting on Monday that may feed into Monday's trading, but most likely on Tuesday. And then on Tuesday, you got a lot of PMIs, and that's mostly what happens next week. A few industrial production, some GDP numbers, and so forth. Earnings are about 3 weeks out now, so that will be the next focus. Probably starting in early July, everybody will start to focus on that. What's the bottom line? We're stuck in the summer trading. The bias tends to be less positive during summer most of the time. And we've been bombarded with just one thing after another in this market. Yet here we are still sitting at 6-year highs. It's not what most would expect. It certainly would not be something I would have projected, 4 years ago or 3 years ago or even 2 years ago. There's still the outside chance that we could see a good-sized sell-off because those structures that allow that still are in place, but we're slowly moving away from them and making them less likely. The odds are a continued range build out with an upward bias. That breakout this week confirms that bias. In other words, we keep making incremental new highs and keep fulfilling that projection to the upside, that bias to the upside. As long as we keep doing that, we have to believe the market's going to continue up. We can't expect it to fall. We have to get evidence of some breaks that actually hold to make us think that way. If we look at the portfolio, I don't have a lot to say here. I added Amgen. We can pull up a few of these stocks and look at them, but essentially, this week was just we had built up last week, got into some of these European, got into some more Europe, and when I look at these stocks, most are doing pretty well. Amgen was a case where the sector is extremely strong, right? You kind of have this range, and inside this range, you kind of got that one, maybe a little bit lower. But this range build out, right, as it held down here, you could see you were trying to get some volume expansion. Now, I don't like big volume at the bottom, so this thing could come back. So to me, this is still a trade. Where's the trade? Ideally, it's right to there, right, the overlap of these two. So if the markets do head higher, I suspect Amgen's going to try to run up to that area. But, it has resistance here, as you can see by the charts. It traded in that resistance and came down, but it traded with volume on quad witching, so I expect it's going to go back up there and test again. Probably going to want to try to sell it into this area more than likely. If we look at some of these other trades, the only other one that I'd probably want to point out was Asher. This is off of China. Asher gets hammered down, right? It's down a big percentage. The zones that I was trying to buy into on Friday, and we'll try to buy into again this week, the ideal one is right there, and then we got the lower ones down here. So I believe as this creates its range, and as China Shanghai creates its range, that initial buy is probably the best one, right? Because more than likely what you're going to see is whenever this stops, right, the spike back up is going to be fast and furious. Now, I suspect it's going to fail up here somewhere, right, and set up the range, wherever that range eventually ends up being and how big it ends up being. But that first spike is the best trade, right? So we want to try to get into it. I lowered it a little bit too much on Friday. We'll look at it again tomorrow morning and decide how to try to trade that tomorrow. But I do think you want to buy that, and if it comes straight on down, right, you want to certainly buy the next one. So that's the way Asher's setting up. Elsewhere, not a lot to talk about, right? I mean, if we look at the Germany and we look at those, I mean, those are all the same. The only thing we sold out this week was Zeltiq. Zeltiq is a big range as well. Zeltiq got even a bigger bounce than I expected. It's all the way up to 32. It made it back to its top. The idea that I was thinking is that we try to sell into here, but I wasn't sure we were going to get the kind of follow through on the Fed, so we sold right down here. So anyway, it does pop higher, gets another 7% or so, unfortunately, after we left. But I suspect it will come back down again, come back down into these lower ranges, and we'll be able to buy it again. It's a range trade. We should trade it that way with the idea that eventually, just like the others, this thing is going to trade higher. What is it doing? It's building out ranges. Everything's building out ranges. And you have to be respectable. When they build out ranges, you got to trade the range. You got to sell it with the expectation that you can buy it back, either at the same price or cheaper at some point later in time. As they get farther out, right, eventually the ranges will end. And more than likely, they will continue in the direction of the trend prior to the range. So in almost all these cases, we have to expect that eventually these ranges are going to extend to the upside. How long? That's always, that's always kind of guesswork. You just have to judge it as it builds out in terms of how it trades. But they probably will extend to the upside in the end. Okay, that's it for today. As always, I thank you, and if there's anything I can do to help you personally, just let me know. And for all the fathers out there, happy Father's Day. Take care, and I'll see you as the week unfolds.